Good afternoon, everybody. Welcome.
Hey, Ellie.
Atlas webinar. Lovely to see all of you. We're going to ask you to mute yourselves, and if you don't mute yourself, we have a magical way of muting you. And then we'll help you unmute if you need to when we get to the Q&A portion of our meeting today. So I'm going to go ahead and give it just one more minute and let others join us. So that we capture as many people as we can capture. This will be recorded, and we will send the recording out after the meeting. I'm also just going to do a quick sound check with my team. You can hear me okay? Thumbs up. Gary, thank you. Did you know on Zoom, if you do it works on here too. If you do a thumbs up, it gives you a thumbs up on the screen. That was a new thing that I discovered the other day. I was doing an interview with a reporter, and I actually didn't give a thumbs up. I'm Italian, so I was talking with my hands, and I did this and was talking about how this thing was going to happen, and the thumbs up appeared, and nobody knew what to do. So, all right, well, let's dive in. Thank you, everybody. Welcome to the Atlas Real Estate Owner Webinar. We're going to continue to do these on a monthly basis, and we hope that we get more and more people to participate. So tell your friends and family that they could have this wonderful hour of entertainment once a month. And actually, it's open to anybody. Atlas clients who we serve, or others who own real estate and want to know more about owning real estate, we're happy to share with them as well. So today is all about Atlas Home Services, and I'm excited to talk about this topic because it's a hot topic, and it's a hot topic for a number of reasons. So I'm going to give a little bit of a background of Atlas Home Services today, an introduction and an overview of what Atlas Home Services is and what it does, and some of the metrics around AHS, what we call KPIs, key performance indicators, and how we're tracking them, what they mean, what they translate to for you as an owner. I am going to hit on kind of one exciting thing that's coming up as a new rollout from Atlas Home Services and the benefits of it, and then we'll just open it up for Q&A. So many of you know that we launched our own repairs and maintenance and construction company in 2022, and we broadly expanded it at the end of 2022 and early 2023. Some of you know and experienced the fact that we had a very difficult time, particularly in invoicing and accounting with our vendors through the middle part of 2023 and into late 2023. And that was primarily the result of not us, but frankly me, underestimating the resources that we needed to successfully launch Atlas Home Services and to handle the sheer volume of work orders that were coming through the system. So at Atlas, we have a few mantras we live by. One is that we fail forward, and this was a failure on my part. The other is we give bad news fast and first, and the bad news around that was it just created a lot of pain for primarily for our vendors, frankly, but a lot of confusion around invoicing and accounting and all that other stuff. We solved all of that at the end of 2023 by migrating out of the accounting software that we thought was the right solution when we launched the business, and migrating into more fully into AppFolio. So now, as an owner, you see your approvals come through AppFolio, and there isn't the risk of duplication of invoices and some of the other things that were happening as we try to get our vendors onboarded correctly. So those accounting issues are in the rearview mirror. We've overcome those, and we're just kind of barreling forward with Atlas Home Services. And I'm actually pretty excited about where we are today, where we sit from a performance perspective today, and where I think we're headed. So real quick, I thought it would be helpful to do a look back at what happened with work order pricing from 2018 through today in 2024. And this data that I'm sharing with you was provided to us by a partner called Property Meld. And Property Meld, we're going to talk about Property Meld here in a minute in a little more detail, but they have over 600,000 residential units. To give you context, we manage about 6,000 residential units. So they have about 600,000 residential units on their property management. It's not property management, but it's a maintenance management platform called Property Meld. And I asked them to give me a look at what's happened to the average work order cost since 2018, and this is what they sent me. So you can see in 2018, the average work order for repairs and maintenance work order was $272 or about $273. And then you can see what happened through 19, 20, 21, 22, hitting a peak in change year over year in 22, 17% rise in average work order cost. Now, again, just to be clear, this is not an Atlas number. This is the average of over 600,000 doors of residential real estate, and now sitting at about $501 in 2024. And if we were to put next to this a chart of U.S. inflation, you would see that it's kind of mirroring the years where we've seen near historic inflation and core CPI numbers. In fact, it trails by about a year, meaning when you see that massive inflation number, it takes about 6 to 12 months to work its way into labor and material costs. So 2021 was actually the highest year, 7% core CPI. Material and labor costs within construction, repairs, and maintenance far outpaced core CPI. Core CPI is the average of all the different ways that we measure inflation. So you can see it showing up in these numbers. What's interesting about this chart is if you look at when Atlas Home Services launched in 2022, the highest year of change in work order costs across our industry, in the near and recent past. So that's a pretty good indicator. And unfortunately for us, our timing was perfect. We launched our repairs and maintenance company right at the time when repairs and maintenance costs were kind of spiraling up. And for a lot of our owners, it felt like, wow, my costs really went up because of Atlas Home Services, where in reality, costs were going up dramatically. The good news is 2024, you can see across these 600,000 residential units, the average work order is $501, and the average work order through Atlas Home Services in 2024 is somewhere in about the $470 range. So we're actually substantially below the average work order across all those doors. So that's good news. So what is Atlas Home Services? If you haven't heard of it, the quick overview is Atlas Home Services is a owned subsidiary of Atlas Real Estate that is dedicated to serving residents and owners. And we do that through 24/7 work order management, professional and efficient turn management, CapEx project management, recurring services like landscaping, snow removal, pool maintenance, all those other kind of recurring work orders, vendor sourcing and professional management. So we have a dedicated full-time national vendor relationship manager working to drive strong relationships with in-market vendors. And through those relationships and through bulk work to them, we're able to drive down costs, and then due diligence inspections and estimation for new acquisition construction. So we have a number of clients who are buying buildings and trading buildings, and we're able to help them even at the acquisition around inspections and estimates to get properties ready to be occupied. So that's a quick overview of Atlas Home Services and all of the things that we offer. This is the most exciting slide that I have for you today. And folks, I only have 6 or 7 slides for you. So we're going to have plenty of time for open Q&A and discussion as we see fit. But this is really what it comes down to. AHS, Atlas Home Services, makes residents happier by completing work faster leading to higher resident renewal rates and lower costs for our owners. So Atlas made a very meaningful investment over the last several years in data infrastructure. So we utilize a very robust data warehouse and data visualization tools like Microsoft Power BI, and we're able to pull this data from a number of different systems, AppFolio being our main system of record, but also from Service Fusion, which has been our scheduling tool, from our project management software, which is called Monday.com, and a number of different sources. And we were able to kind of aggregate all that data into one place and then pull reporting that's really helpful to us. So the first bullet point here is really the whole story. As you think about owning residential real estate, we talk often how the number one cost of owning residential real estate is vacancy. That is the number one cost of owning real estate, and along with vacancy comes the cost of turns. And as you can see, with average work orders climbing 84% since 2018 across our industry, obviously the cost of turns mirrors that. So cost of labor and materials to do unit turns is substantially higher than it was 6 years ago. And the key to driving profitability on your units is going to be driving resident retention. So what we're seeing is a 5% higher renewal rate, 5 percentage point higher, not just 5% higher, but 5 percentage points higher renewal rate for AHS service residents. Those residents are more likely to stay in that unit, meaning that not only do you have the cost of a turn, not have the cost of a turn, you don't have the cost of downtime because of that unit being vacant. And that is very, very meaningful. Year to date, Atlas Home Services completed over 14,000 work orders. Work orders that are completed by Atlas Home Services are done 4 days faster. And that just goes to resident satisfaction. If I put in a work order as a resident because my faucet's dripping, or my sink is leaking, or my front door won't latch, or whatever the issue is, I want it done quickly. And the fact that we're done 4 days faster, literally twice as fast. So so it's 4 days is the metric, and the other metric is 8 days. So literally done twice as fast, and that is 4 days is actually a very good number across the industry. And then on top of that, AHS invoices are roughly 14% lower on average than non-AHS invoices. So the punchline, AHS makes residents happier, we complete work faster, and we retain more residents, meaning we drive better NOI for you at your properties by using Atlas Home Services. What are some of the benefits of Atlas Home Services? Dedicated team members are focused on work order management. So we have a whole team of maintenance coordinators that are bringing those work orders in. They're finding the right vendor who can do it quickly. They're handling the scheduling of that vendor with the resident, and managing that work order really from soup to nuts. Consistency with work order and turn performance. So because it's the same group of people doing that day in and day out, you get consistent results. We do provide professional bids that include line item detail and pricing. We have a complete quality control process, meaning that if we don't have before and after photos and clear quality from the vendor, they're not going to get paid. So they're incented to do that. And then as we highlighted before, that translates into a high level of customer service for our residents. We also have a process by which we are vetting every vendor and ensuring that they are everything that they should be to be doing work in your property, meaning they are insured, they are licensed. I often joke internally that small property management companies typically work with the uns when it comes to vendors, the uninsured, the unqualified, the unlicensed, the unvetted, just add an un in front of something. And often that's the kind of work that's being done. And the problem with that is sometimes that work is a little bit cheaper up front, but rarely is it work that is reliable over time and doesn't then lead to more cost down the line. So our goal is that when we do a repair, we're doing it in a way that is affordable to you as the owner, but also we're not going to have to be out there 3 months later to fix the repair that wasn't done well the first time. And then at the end of the day, it's just quicker stabilization of new properties as they come on board. I only have 2 more slides. I'm so excited. My last slide before we go to Q&A is the announcement of our partnership with Property Meld. So if we go back to this data that I shared earlier on the change year over year of the cost of work orders, again, this isn't these aren't Atlas numbers. This is over 600,000 residential units, and this was provided to us by Property Meld. And Property Meld is North America's #1 maintenance software. They're not a maintenance company. They do not provide vendors. They don't have technicians. They don't do work. They're simply a SaaS company, a software as a service company. And they provide a software overlay that allows us to really streamline communication for everyone involved in the process. So residents will go to their portal, their resident portal in AppFolio, and they'll click submit a work order, and that will route them to Property Meld. Property Meld is a partner with AppFolio, so fully integrated into AppFolio. And that Meld then will go through a process first of what we call work order avoidance. That doesn't mean we don't want to do work orders. Once we have a work order, we absolutely want to do it, and we want to do it quickly. But if it shouldn't be a work order, we don't want the work order to ever happen. So the first thing it's going to do is troubleshoot and triage with the resident. If your garbage disposal isn't turning on, did you push the button on the bottom? Did you put a broomstick in there and wrangle it around a little bit to unstick your own garbage disposal, right? So little things like that we all know as people who own and manage real estate, you should do first. Meld will help us do. And then once they submit that work order, it's almost like a pizza tracker. I don't know if anybody uses the Domino's pizza tracker. I have teenagers, so the Domino's pizza tracker is an important and necessary tool in my life. Property Meld creates that for the resident for the repairs and maintenance process. So they handle scheduling with the resident, and that scheduling is measured in minutes, not hours. They shoot out the approval to you as the owner, and you'll get a bunch of details on this before this goes live, but it very much streamlines your approval process, gives you full transparency to the maintenance process, and then the big thing that it does for us is it gives us that price benchmarking based on over 600,000 units under management. So we're able to see what's the average cost to replace a toilet in a zip code or in an MSA. And that's been one of the hardest things for us to get our hands on, because if you call around and if you call plumbers or you call maintenance companies and you ask what's the cost to replace a toilet, you're going to get a cost anywhere from $400 to $1,800. And that's just reality today. Or if it's, hey, last year my wife didn't unhook our hoses from the side of the house. You see how I blamed my wife for that? Like, that's actually her job. And it caused a broken pipe for us, and we had to have a plumber come out, and the 3 people I called, it was literally $1,000 range to get that work done. So this will give us very clear benchmarking of pricing across all of our markets, which we're really excited about. So that rollout's happening in late August. We're in the process of integrating it now, and a lot more details will follow for our owners around what value that's going to drive going forward. So in summary, I know it's only a 30-minute call, so I wanted to leave time for Q&A. In summary, a huge thank you to our owners. We love you. We are grateful that you entrust us with your assets. And as I said at the beginning of this call, we fell down when we launched Atlas Home Services. We really struggled with it in the first year that it was in existence. And today, I am more excited than I ever have been about the offering and the future of Atlas Home Services and our ability to serve you. First, serve our residents, because when we serve our residents really well, we serve our owners well. and I'm excited what the future holds for that. So with that, I'll start taking some questions. I see Brittany has her hand raised. Brittany, I don't know if you're able to come off mute, or I don't
Hey,
see a way to. Oh, there you are. I can
yeah,
hear you.
can you hear me?
Yeah, absolutely. What's
Thanks,
up?
thanks for taking my question. Yeah, I mean, from the owner perspective, I'd say um, the new program was really rough for us
Yes.
to delays getting vendors out compared to before you launched it, as well as a lack of visibility into the charges once the service was received.
Yeah.
I was wondering if you'd be willing to commit to a service level target for a response to owner questions on services. For example, I have what I believe is a duplicate charge worth over $700 from February, and I've been working with my property manager, and she hasn't been able to give me a response. And it's, pretty frustrating now that it's July.
Brittany, thank you for bringing that up. So shoot me an email, and if you would just copy your property manager on that email, we'll get it resolved ASAP. And I like your comment. Your question is, will we commit to a service level agreement that commits to, a resolution timeframe? The answer is yes. And I wrote that down. We will absolutely commit to a service level agreement. Sometimes we are at a little bit the mercy of the responsiveness of the vendor that was used. We don't do all of that, all the work in-house. So, but that shouldn't impact you. It's a vendor we chose, and that's on us to drive that responsiveness. So I don't know what the right number is, Brittany, but yes, we will commit to that, and that's a takeaway for me to put in place an SLA agreement that we can communicate broadly. So thanks for bringing that up.
Great, thank you.
Brittany, my email is tony@realatlas.com. So just include me on an email to your PM and we'll get that resolved.
Thank you.
Absolutely. Thanks for bringing it up. Other questions? Anybody want to know what's going to happen with interest rates? Or the election? I know all the answers to all this stuff, so if you want to know, you just have to ask.
I have more questions about Real Atlas if no one else does.
Yeah, please.
So you mentioned, some challenges expecting the scope of, just the breadth of what it would take to accomplish this. How did you increase staffing, or how do you expect the problems will be resolved moving forward?
That's a great question. So a few things. One is you hit on the first most important one, which is staffing. So when we launched Atlas Home Services, and Brian Ballou is on this call too. So Brian, if you want to unmute and just correct me where I get this wrong. I want to say we had 2 or 3 people handling accounting for us. I think maybe 2, maybe 1 in our home office and a few of our offshore team. I think today we have 3 dedicated team members in our Colorado office, and somewhere between, I'm counting in my head, maybe 8 of our ITMs dedicated just to invoicing. So, that's probably the biggest one, Brittany, is that we just missed on the sheer number of work orders that were going to come through that process. And the staffing wasn't there, and staffing's fully there now. I think the second piece was software. So we brought in an outside consulting firm. Again, we didn't think we knew it all. We brought in an outside consulting firm around how to set up our billing and invoicing process. They gave us advice on that proved to not be helpful. And we set it up incorrectly, I would say, is the best way to say it. At the end of 2023, we migrated out of that process and into AppFolio. And that was a massive fix to the invoicing and tracking and validating process. So that's probably number two. And then the third thing is probably the property meld launch and being able to use meld as kind of a single source of truth in all of the resident communication, the owner communication, and the vendor communication all in one spot. So we haven't been able to get to that quite yet, and meld will solve for that. So those are probably the three big things, like having the appropriate number of staff. We're probably overstaffed on Atlas Home Services accounting staff now, which I'm great with. Let's stay overstaffed until I get on an owner webinar and everybody says we love Atlas Home Services, it's amazing. Then we'll stay overstaffed. And then solving for just the software and how that software delivers the service. So great question. Thank you.
Yeah, thanks for the details.
Oh, absolutely. Before we go back to Brittany, because I bet she's got another good question, does anyone else have anything they want to lob over to me? Okay. Brittany, I love that you're being respectful and want to give everybody else other opportunity, but I think the questions you're asking are questions everybody has. So I'm super appreciative of that. Any other questions before we wrap up?
Hey, I have a general question.
Yeah.
So this is not related to AHS, but last time you guys, one of these owner updates, you were talking about how the laws in Colorado are changing to be more tenant friendly. You know, now that it's been maybe a year, a couple months since then, how have you seen any differences in behaviors or results as a cause of legislation?
That is a great question. So I'm gonna say a couple things on this. One, the law changes in Colorado are substantial. So habitability law changes are substantial. Even a couple years ago, the Renter Application Fairness Act was substantial. These are substantial changes. So I don't want to downplay that at all. We just live in a really kind of oddly polarized time. So if you are on one end of a political spectrum and you see a resident law pass, it's easy for that to get caught up in this kind of this polarization, and all of a sudden it's like, you know, no one should own real estate in Colorado anymore. It's like, oh my God, like where did that come from? Colorado's a wonderful place to own real estate. So I just want to say that I think there can be an overreaction to what might happen because of the law changes rather than the reality of what's likely to happen. Here's the deal. We serve, thousands and thousands of residents, and the very vast majority of them want to pay their rent and they want to be a good resident. That's just the reality. That's just how people are. The bad actors can take advantage of this. So what we have seen is, particularly in the Denver metro, and this is a little less the case in other parts of the Front Range, a little less the case in Colorado Springs. We've seen extended eviction timeframes, and that has to do with there's the thumbs up again. See, that's what happens. I count with my thumb, apparently. Extended eviction timeframes because now notices have to happen differently, and how we do an eviction has to happen differently. But there are some tenants who then take advantage of that and they appeal to the court. And so an eviction that might have taken, might take 1.5 times what it should have, or twice as long as it should have in the past. We're not seeing a lot of that. That's not the norm. That's not an alarming thing that's happening, but it is a reality and something that we're having to navigate. My other comment on that is, if you are deeply concerned, and we do have a handful of our owners who have come to us and said, I'm really concerned about my exposure in Colorado. And I think I want to just diversify my exposure into some other markets, and we're helping them do that. So we're helping them sell assets in Colorado, use a 1031 exchange, and purchase assets in Arizona or in Kansas City or in Texas, other markets where we transact and manage real estate. And that's helping them feel a little bit more like, okay, maybe I won't have quite as much appreciation in one of these markets, but I'll have different cash flow and I don't have to worry quite as much about the political environment. So we're doing a lot of that too. And the best way to do that is just a deeper portfolio evaluation of what you own, which our team has a lot of expertise in. So I just offer that up as a service to anyone who'd like to take advantage of it. Does that help answer that question? Yeah. So I guess kind of in summary, nothing alarming, nothing crazy right now. They are substantial changes. I do think habitability you're going to see the impact of the habitability law. It's going to play out over the next year or two, but nothing crazy. Also, there was a headline the last few days around the Biden administration proposal of rent control, national rent control. I'll just comment on that real quick. Nobody asked, but if you've seen the headlines, the likelihood of national rent control is not zero, but it's very, very close to zero. And it's not something we're very concerned about. We see these headlines a lot. They're very much meant to drive kind of, a little bit of outrage and uproar and all that other stuff. And the odds of that making it through even an undivided Congress are pretty much near zero in our estimation. And even the reality of what was proposed isn't a 5% cap on rent increases. It's much more nuanced than that. So we have almost no concern of that becoming law. And friends, we're 3 minutes over 2:00. So I am available to everyone and anyone who wants to chat with me about real estate or wants to give me parenting advice on teenagers. You should reach out to me directly. I need all of it that I can get. But thank you so much for attending today. We will send this recording out. And if you have other questions as follow-up, please do not hesitate to reach out. We're so appreciative of you and that you entrust us with your assets. And we're excited to do that for years to come. Thanks, everybody.